Hello, everybody, and welcome to the first of the free classes that we will be releasing throughout the next coming weeks and maybe months. Um, a lot of these classes are meant for those people that have yet to step foot within the trading space, are thinking about transitioning into being a trader, or are starting out trading and for all intents and purposes, a lot of these courses, these free courses that I will be releasing, are meant to be a primer for those of you that want to come in and do the private mentorship with me. Now, they're meant for beginners, traders, and novices, right? And they're meant to be a primer, most primarily being a primer. Now, try to think about this free classes in terms of um, basic training at a boot camp. Before you be able to shoot a gun, before you be able to take up a firearm and go to the shooting range and take pot shots at whatever targets that you set out, this is the briefing, the safety briefing, so to speak. It's a lot like that. It's meant for you to understand what you're about to be going into. And if you're going to be learning from me in the private mentorship, you really need to be able to learn and understand these very basic and simple concepts in terms of price action as well as technical trading in order for you to grasp comprehensively a lot of the things that I will be teaching you in the private mentorship. Okay. And I just want to say that I am not the best teacher. There's a lot of people out there who excel at teaching trading. I obviously, am not born to teach, perhaps, I've never really done it. But I do believe that with my knowledge, I have something of value to offer to you. If you're looking to, learn how to trade, if you're a novice and you want to figure out what's causing you to, what's stopping you from achieving consistency, if you're a veteran and you want to figure out what's causing you to lose more than winning, all these things I will cover in the mentorship, in the private mentorship. And you will see towards the end of it that you will have a better understanding of price action. You'll have a deeper understanding of how markets work, what price is going to do. You'll be able to have the ability to predict price movements, and ideally you'll be able to be a better and consistent trader. Now, what do I mean about consistent? I mean to say that I will teach you how to develop certain processes that you will have to follow mechanically, and you'll be able to develop these processes by yourself according to what your personality is and what you're comfortable with, and make trades that are strategic, that trades that you risk very little of your own money, but you'll be able to take home a lot of what you risk on the market, and you'll be able to consistently pull what you want from the markets. Now, that's not to say that you won't go through losses. Everybody goes through losses. I go through losses. Okay, every single trader goes through losses. Now, that will be a lesson on its own in how to handle losses. But I just want you to be aware that in this game of trading, in this craft, this very fine craft, this human endeavor, probably the hardest human endeavor there is, it's not an easy thing to do. And it takes a lot of time, a lot of hard work, and a lot of commitment and dedication in order for you to get good. Okay, there's no shortcuts to this. There's no cakewalk. There's no get rich quick schemes. It's all hard work, and you need to have a passion for the markets, for the charts. You need to have a passion to be working and bettering yourself, bettering your craft as a trader every single day. There will be times when you just feel tired, and that's okay, because you shouldn't force yourself to learn something. I highly recommend that you don't do that, right? Everybody has their own levels of understanding, their own skill set. So you really need to take it slow and let time do all the heavy lifting for you. You just have to have that drive, and you just need to show up when you can, ideally every day or every single day or as much as you can, and dedicate your time and effort to doing this properly. Now, I promise you, if you do it properly and if you do put in the work, you will see results. Now, when exactly those results might be, again, it would differ from everybody, for everybody. Okay? I myself took years in order for me to be a consistent, profitable trader. Years. And many, many failures. Okay? I think I blew up maybe one or two accounts. I didn't go to zero. I've probably just like got below the margin requirements for futures, and I think I may have been margin call maybe once or twice in my life. And that's again a story for another time. But there's no simple way of going about this. Okay, you're going to lose, and you just have to put in the hard work. And that's all I want to say before I start this free mentorship or free courses that leads to the private mentorship. And again, it's a primer. So if you're a new trader, you're in luck. This is just right for you. Okay. Oops, sorry. Right. So what are price charts? Price charts is the study of price of a particular asset. Okay. So an asset is something that's can be traded by the public on an exchange. Okay. It could be, if you're trading stocks, that would be shares of company on an exchange. Typically, if you're Malaysian, you'd probably be familiar with Bursa Malaysia, and publicly traded, publicly listed companies. They have their shares traded on the exchange, so that would be considered an asset. If you trade crypto, I don't trade crypto. I would never touch it. For reasons that I don't want to go into right now. But cryptocurrency coins on an exchange, that's a type of publicly traded asset. There's also futures, which is what I primarily trade. Futures contracts, that's an asset. Commodities, those are an asset. Bonds, treasuries, T-bills, those are assets. Okay, so you can see those assets being translated on the price chart, and particularly if you look at its historical and current behavior. So a chart, which is a time-based chart more specifically, happens to be the most important tool that every trader, especially if you're a technical analysis trader, which is what we are, which is what I'm teaching, use. Right? It's your compass, your Swiss Army knife. It's your bread and butter. It's everything. That's what charts are. Okay. So what are charts then? It provides a visual representation of an asset price over a set period of time. Okay. It forms the backbone of technical analysis. Right? Now, this aspect of time is very important, as you will see later. But a time-based price chart is something that all technical traders have to utilize. Okay, and another way of looking at price charts is that it's a visual representation of historical and live price action. Okay, so what is price action? It's what you see visually on the chart, just like what you see here. Now, this is a candlestick chart, right? And it shows you a form of very basic and rudimentary technical analysis, right? It shows you an uptrend up here, it shows you a downtrend right there, it shows you a sideways trend, downtrend, uptrend, and so forth, right? It's very, very basic, okay? And obviously, in the mentorship, you'll be learning a more advanced and refined, might I say, technical form of technical analysis. And yeah, but if you're new and if this is the first time that you're seeing this, and if you've never noticed that there were trends in a chart, that's what it looks like. Okay, that's what a acolyte or someone who is new to this would tend to see what charts are. They'll see an uptrend, see a downtrend there, or you go sideways there, and so forth. Okay, so what do price chart represent? Okay, so a price chart visually depicts price action within a given time frame or a specific time frame. Okay, what are these time frames? It could be anything, right? It could be what would a price of an asset be on a daily time scale, or a monthly time scale, on a weekly time scale, or on a 20 minutes time scale, or 1 hour time scale, or a 1 minute time scale, or 20-second time scale. It could be any one of those variations. Okay, so when you look at a chart, you want to ask yourself, like, what time frame am I be looking at? Am I looking at the 1 hour time frame, typically, or am I looking at the daily chart, and so forth? So a lot of these charts are set within the framework of a specific time frame. Now, any asset that has a price fluctuation over time can be analyzed with technical analysis. Okay, so you use technical analysis, right, in order to gauge or determine what price is doing, right, or what are the behaviors or characteristics of price within the time-based chart. Okay, so again, like I said, we use technical analysis, right, to gauge what exactly that we're looking at in terms of price action, and we specifically look at the candlesticks in relation to each other and also in relation to time as well as price. We'll get to that in the next slide, okay? But I just want to show you here, it shows you another form of, a slightly more refined technical analysis than the previous slide, and it's widely used by traders from all walks of life, even the ones with titles, right? The ones that work for Goldman Sachs and Citibank and Merrill Lynch and all those guys. People in financial institutions, right? The guys that you see on social media, right? They will tell you, like, oh, it's a falling wedge right there, right? It's doing this and that, and that's a breakout. And if it does this, then we definitely think there's a breakout right there. And this, I just recently found out that this is called a cup and a handle. So some traders, most traders, they trade patterns. So when they see something like this, right, they say, oh, that's the cup, and that's the handle of the cup. So that means this price is likely going to do this. It's going to just like move upwards from that point on, and that's fine. Like if you want to trade like that, if you want to trade patterns and so forth, but we're not going to be really looking at that, right? We're going to be looking at or learning more like something that's far more superior, something that's far more logical. No, we're not reading tea leaves in a cup, so to speak. Okay, we're looking at price. Okay, simply put, we're just looking at what price is doing. It's very, very pure, right? We're not using any indicators. We're not using, any sort of um, mathematical compression of information that's already happened and told to us in hindsight, right? We're just looking at price, and we're looking at charts, purely looking at that. Okay. Okay. So a candlestick chart, which is what you see over here, this is our chart of choice. Okay. We will be using a time-based candlestick chart. Now, what is it? What is a candlestick chart? Well, and the big picture is that the x-axis here, which is the the horizontal axis here, this represents time. Okay. If you look at the bottom left of the page, of the chart, you see 6, 12, 6:30, 8:30, 6 a.m., 12 a.m., 6 p.m., and so forth. So this represents the time, okay, from left to right. And if you go on the vertical axis, which is the y-axis over here, this represents the price scale, okay? So the prices are always plotted from left to right, okay? Like that, like a book, okay? You read it from left to right. And the most recent price is what you see in this green circle, okay? That's price as it's printing live. Always, it'll be here on the right. Okay, so now what are the types of chart? Okay, there's 3 major types of chart that traders use. Again, I put an asterisk there. We use candlestick chart, but it's worth going through what the other 2 means. Now, I'll very quickly go through what a line chart is. Okay, simply put, a line chart shows you a line from one closing price to the next closing price. Okay, but it's not very good. It's not very good because it doesn't really give you a lot of information as to what price is doing. It's just a line, as you can see right there. This is a line chart. It doesn't really give you that much information, right? It may tell you, oh, this is going up here and it's falling down there, and then going back up again and it falls down there. Okay, but does it tell you a lot more than that? Well, maybe, if yeah, it certainly can. I can tell you. I mean, I'll stop pulling your leg. Of course, it actually tells you a lot if you know how to read it. Okay, but as a beginner, as a novice, as someone that wants to learn how to trade, or want to get back to trading, you're better off looking at something like a bar chart or a candlestick chart, which is frankly a lot more harder to read, but it gives you a lot more information. Okay, so if you look down here, that's a bar chart. Okay, and it's a little more complex. If you see that green little bars and those red bars going down, okay, those are called a bar, okay, in a bar chart. But the thing that is of particular interest to us is that a bar chart, or a bar within a bar chart, it shows you the opening and closing of prices, right, as well as the high and lows of each individual bar. Okay, so traders, they normally call this bar chart the OHLC, or what it means is an abbreviation for an open, high, low, close for that particular asset. Now, I really just want to bring your attention to this, because this is where it gets a bit serious. Okay, understanding the open, high, low, close is the key and the basic foundation to understand candlestick behavior. Or simply put, the open, high, low, close is the core to your understanding of price action, or how price behaves. It is literally the foundation, right, that you set your understanding on what price is and what it's likely to do. in any given time frame of a particular asset. Okay. All right. Now let's look at the open, high, low, close. Okay, and just bear with me. All right. On the image that you see on the right side of this slide, okay, we have two different candles. You have a down close candle where a price goes down, or you have an up close candle where a price goes up. Now I want to bring your attention here to the candle on the left, which is a down close candle. This would be an open, high, low, close. Okay, so an open tells you the opening price of that candle or that bar, this line here, right? So imagine if you were on that chart where you were looking to the furthest right in the previous slide, where price is printing live in front of you, right? You want to be seeing, like, where does it open? The next candle that forms, where does it open? It would open, and it would be represented, it would be the open would be represented like this, right? And what makes a down close candle? Well, after it opens, it will go higher, make a high, and then go lower past the open to make a low, and then it'll go back up again and close. So again, for a down close candle, an open, and then you have a high that's close to the open, and then it falls down below the open to make a low, and it forms a low, and then it retraces, which means it goes above where it came from, and then it makes a close right there. Okay, so that would be a down close candle. Now inversely, if you look at an up close candle, you'd have an open, instead of an opening here, which is high, right, or close to the high, you have an opening that opens and makes a low, right? So imagine the next following candle, it opens there, right? And it goes low, and it goes high, it makes a high, and it goes below the high, close to the high, and it makes a close. Okay, so again, an open, it goes an open there, makes a low, goes up, makes a high, and then makes a close. So that would be an up close candle. Okay, so I want to point out that these are the basic rules of how price is. What makes a down close candle? What happens when when you see price go lower on the chart, right? Or when the price goes higher, this is what happens. Okay, it open, high, low, close, right? So imagine for a second, just imagine this bar printing in front of you. It opens there, makes a high, low, and close, and the next following candle opens very close to the previous candle's close here, right? And then it makes a low, and it goes back higher. So it goes down here lower, and it goes higher like that. Are you able to see visually what happens? That's what price does, right? All right. What does this look like, right, when you translate it into a candlestick chart? Okay, as you can see, the candlestick chart, if you look at the down close candle here on your left, if it makes an open, makes a high, makes a low, makes a close, if you translate it into a candle, that would be the open, equivalent to that, right? And then it makes a high there, and it goes lower, and it leaves a wick. That's a candle. Just imagine this is a candle, and that's a wick, right? It goes low there, retraces up, and then makes a close right there. So that would look like a down close candle, right? Or bearish candle is another way of putting it. And then inversely, if you look at an up close candle, you can see that the open is here, low, high, close. When you translate it into a candle form, the open would be down here, makes a low, makes a high, and makes a close. So you can see that it's a lot more visually clearer, right? Compared to a bar. A candle visually tells you, communicates very clearly to you visually that this is a down close candle and this is an up close candle. And you can clearly see, oh, that's the open, right? That's the high, right? And if there's a wick here, that means that I can clearly see that between the open and the high, that would be the distance between the open and the high, that wick over there. And if you go to the low and close, that will be the distance between the low and close, right there. Okay, and similarly can be said about the up close candle. Okay, again, it helps you visualize a down close or bearish candle or an up close bullish candle by displaying the bodies, right, using two different colors. Okay, now I just want to very quickly point out that this is basically, again, how price behaves. But candles don't always look like this, you know. Sometimes it can be like a thin, a fat one. Sorry, a very long, you know, sturdy one, or a very small, stumpy one with like long candles, right? And inversely for this as well, for a bullish candle. But it still would mean, say, let's just say like there's an opening here, okay? There's a price opens up here and it goes all the way high, right? It goes all the way high, and but it falls low, and then it closes very close to the open and the low. Would that be a down close candle? Yes. It would still be a down close candle. Why? Because you have an open, high, low, and close that's above the low and below the open. Okay, similarly for, let's just use another example for an up close candle. Say you open here, right? And then the low just, it barely makes a low. It barely moves, you know, a small distance away from the open, right? Just barely moves from there. And then it just rips higher, right? And then it also closes, right? It also just closes very close to the high. Would that be an up close candle? Yes. Yes, because you have an open, you have a low, you have a high, and then you have a close. And the low would be below the open, the high would be above the close, right? So that would be an up close candle. If it goes open, high, low, close, that would be a down close candle, right? It would be an open, low, high, close. That would be an up close candle. It's very, very simple. I know as a new mentee or someone that's not familiar with this stuff, it takes a while to get used to it. But trust me, it's much like riding a bike or driving. Okay? You'll get it. You'll get it. Like it would be like, it's something that will come naturally to you like the back of your hand. Now, a lot of other traders or other technical traders, I don't think they place a lot of emphasis on the open, high, low, close. Okay, or maybe they do, but it's something that's just like, okay, done and dusted. Okay, it's just an alphabet, for example. But you know, many of them fail to realize the power that's contained within the most simplest things. Right? It's very, very powerful. It's if you understand just how deep the open, low, high, close, and the open, high, low, close is, and understanding in relation to many things that you would want as a trader, which I'll touch on later on in this presentation. But you'll start to see that actually, a lot of these rudimentary or basic concepts that may seem basic on the surface, if you learn to master even what you think is a simple um, understanding or a simple concept, it's more than enough for you to trade. You don't need to introduce a lot of complications in your trading, right? In your craft, you don't have to be so sophisticated. You don't have to have so many indicators plotted on your chart, for example, right? And making it look like a Star Trek HUD, right? A futuristic sci-fi thing. It. You don't need any of that stuff. You don't need any of that stuff, right? What I'm trying to teach you as a mentor is that the simplest thing is often the best, right? Try to think of what we're trying to learn as like, sort of like drunken master kung fu, right? Where I tell you, you take this bucket of water down to the hill every single day and come back up again and do that, do that like for as long as I say, right? And you may think like, what the heck, man? Like, what is this stuff? Like, why am I doing this for, right? And then one day you're gonna realize that like you'll be able to just like punch through walls, be able to fly off bamboos, fight with like swords flying in the air, all that stuff. To use that analogy, it's very, very powerful, and you'll be able to just slice and dice through everything, everything, and you need nothing. You would not be dependent on any single thing other than, well, in this case, the open, high, low, close. Okay, and I'm going to teach you in the private mentorship how to blend a lot of these learnings together in order for you to formulate your own trading style, your own strategy, your own model, and go into the markets that in a way that's uniquely you. Okay. All right. So let's look at the open, high, low, close in the candlestick chart. All right. And here we have an example of a 1 hour time frame on the NQ or Nasdaq futures or the Nasdaq index, financial index, right? It's what I primarily trade in, okay? And it's a very good asset, but it's very volatile, right? It's very exaggerated in terms of the open, high, low, close, right? Of the candles here. But at the same time, I really enjoy trading it. It takes a while for you to be able to fully be comfortable with trading it. I wouldn't recommend anyone to immediately trade this asset class. I would say if you want to do U.S. financial indices, I'd say you start with something like the S&P 500. I highly recommend if you do decide that you want to trade, which I don't really recommend you doing in any form of way. Not even if you've been learning for a long time. In fact, I wouldn't even necessarily promote the idea of any of my mentees to be trading, not even with a demo account, even towards the end of our 3 months mentorship, right? And why do I say that? It's because that you're just not ready, right? You're just not ready, and you really don't want to develop any of those scars, get hurt. Don't do any of that, all right? And I'll talk more about that in our private mentorship, and I'll guide you through it. But if you don't join our private mentorship, I just want to impart this, wisdom for you, and tell you that try to stay in a demo stage for as long as you can, right? If you're already trading and you're having a lot of losses, um, I would suggest just like stop using live funds immediately, and start using a demo account and stay on that, stay demo trading for as long as you can. Listen, I still demo trade, right? I still do it regularly. I do it to keep in shape, right? I don't risk any real money, and if I'm wrong, I'm able to like go back and look at the, where I did wrong and fix it. And I don't risk any real money, right? And I, you know, it's something that I think about often. Like, I started trading like very late in life, and I really envy people who, discover or start trading when they're young. Say like, I see on social media now that they are teenagers, like, like 14, 15-year olds who, I don't know, I don't even know how they even like open an account, but yeah, they trade, and I often think like, man, if I had that much time, if I were a teenager or someone in my early 20s, and I spent like years, my imagine if I spent the entirety of my 20s just demo trading, right? I would be a monster. I mean, I'm already am a monster, but I would be a mega monster, right? I would be like 1,000 times better than what I am now, right? And that's the power of demo trading, right? That's the power of getting better and improving yourself. You're able to put, a very safe environment around you, like a protective cocoon, right? You'll be able to test out your strategies, test out your ideas without harming yourself in the process, right? Imagine if you were like a scientist and you're trying to come up with an invention. Like, why would you want to risk your life and your livelihood on every single experiment that you make, right? Why would you want to blow up your lab or your house where you're running all these sort of like experiments? Why? When you can just run a simulation of it. Okay? So, try to stay in demo for as long as you can. If you don't join my private mentorship, that's fine, right? And if this is all that you're gonna be hearing, that's fine too. That's really fine, But please, please be careful out there. Please be careful out there. And if you're on a losing streak, on a long losing streak, I'm talking about like months and months, man. I mean, it happens. It happens. It's happened to me. Yeah. But you know what I did? I just stopped trading. I just stopped trading for like, I don't know, like 8, 9 months, sometimes a year. And I just go back to demo trading. And there's other things that you have to do, back testing, tape reading, forward testing, journaling, all these things. I'm sorry, I got to plug. I will teach this in my mentorship as well. But there's so much more that you have to do in order for you to get better. And you don't need to risk life funds. Okay? So I'm sorry to go on a tangent there. I just really want to point out that, there are risks involved, like very real risk, very, very real risk when in this thing that we do, which we call trading. It's the most difficult thing for a human being to do, right? It's very, very hard. Very, very hard. Most people fail at this. Fail at this. They fail on the first week, sometimes the first few days. Most people. Okay? And you're not going to succeed if you go in blind and you're going unprepared. Okay? So please, please, please stay in demo and just be safe. Okay? All right, now let's get back to the learnings again. This is NQ, right? This is the Nasdaq Futures Index, all right? And we're on the 1 hour chart, okay? So if you look at this chart, right, you can see that each of the candlestick, right, each of the candlestick represents an open. Do you remember? If it's an up close candle, a candle that's bullish, a candle that's moving upwards, you will have an open, low, and that's exactly what I mean when I said that the low would just be a stubby little wick right there, close to the open, and then you have it expands high, makes a high there, and then it closes there. And then what happens in the next following candle? It has an open that's close, very in close proximity to the previous candle's close, right there. And it makes a low, high, and then close. So now let's look at so these are the green candles, right? And you see them, which is an open, low, high, close. It expands higher. Now let's look at the black candles, which shows you if price is in a bearish state or when price is moving downwards, right? Let's look at this. Look at this guy, right? You have an open, high. That's the open right there, right? That's in close proximity to the previous candle's what? The previous candle's close, right? That's open, low, high, close. And then the next candle, which is a bearish candle, you have an open that's in close proximity to the previous candle's close here, and it rallies higher, makes a high, and then it suddenly drops all the way down right there. And then it retraces, which means it retraces where it came from, up again, and closes there, which is again in proximity to what? The previous candles close. Is it higher or lower than the previous candles close? It's lower, right? Look what happens next. The next black candle, a bearish candle, it opens in close proximity to the previous candle's what? Close, because it's a down close candle. So you see an open, high, low, close. There. Opens there, goes high, makes a low, and closes. Right? That's a price moving lower. And that every single one of these candles represent 1 hour within a time frame. See, 6 o'clock, 6 a.m., 12 p.m., 6 p.m. So let's say this is 6 a.m. 6, 7, 8, 9, 10, 11, 12, 12 p.m., 1 p.m., 2 p.m., 3 p.m., and so forth. Each one of these represent a 1 hour candle, okay? All right, now let's look at time fractions in the candlestick chart, okay? Don't be discouraged when you look at a lot of this stuff, okay? Like I said, if you're new, it's fine. It'll take some time, okay? But it's not that complicated. It's just something that's very new to you, okay? What I want to say about this chart is that when you look at the open high low close or the open low high close in different time frames, it will reveal to you a better picture of price behavior and understanding of bias, which in this case is the daily bias, okay? I'll speak a little more on what a bias means, but I just want to bring your attention first before I talk more on that on this big candle here to the right of the chart, okay? So this represents a whole day, one single day, right, of that particular asset. This is the NQ, is the same asset as before, right? But this represents a single day, whereas this represents 1 hour. Now I've plotted this onto this chart to show you that in different time frames, price will appear in different forms, but not that different from each other. It's in relation to one another, right? If you look at this day open here, right, which will be 6 p.m., that's when the new day, if you look at your charts, a new day would start at 6 p.m. Okay, that will be considered a new day. You can see if you're looking at the in a daily chart, that's when the new candle would print. Okay, so what happens here? That's the opening. Because this is a down close candle, you can see that it opens there, makes a small high, and then retraces lower. So that would represent on a daily time frame, right? On a daily candle, just imagine this is the whole day. That would be the open, right? And then, and that would be the daily open. Yeah. And if you look at this candle here, you can see this is the low of that particular day so far, right? This bearish candle right here with this long wick, you can see that's the opening, high, open, high, low, close. But that low on a 1 hour chart, it would look something like this. It would just look like a stubby little wick of a candle, right? And do you see the body is in relation to the day open, right? And then when it starts moving upwards, like this, you can see that the daily high is still being made live by this asset class, by NQ, right? It's currently making that high at the time when, you know, I took this photo of this chart right there. So it looks like that on the daily time frame. But if you look on the smaller time frame, because a daily would be what, 24 hours, right? So within 24 hours, how many hours is in 24 hours in a day? 24 of these candlesticks, right? 24 of these candlesticks would constitute a whole day. Okay, so it would be from 6 p.m. to following 6 p.m. So anyways, that's all I want to impart for you for now as a novice. Okay, there's different ways of looking at it on different time frames, right? Okay, and you know, if you want to go deeper into this in your understanding of how these price, a candlestick, will look at you, it will also tell you something, right? You can see that this was something we would call a bullish reversal candle right there, where there's an open, right? It goes all the way down, it makes a daily low, and it just reverses, and then it goes higher like that, and it keeps going higher, right? If you look at the daily time frame, it will look like that. But if you look at the hourly time frame or an hour chart, it will look like that. But if you look at the daily there, and it looks like that, it's very clear, right? That it's obviously going to be a bullish reversal, right? It's going to be like, well, it's likely going to go higher. Look at that. So what does that tell you, right? It gives you narrative. It gives you context, right, of what is happening. And there's a difference, right, in the ways that you look at price. There's difference in terms of perspective and how you see what price is doing on any given time frame, right? There is a difference once you put it in the context of time. Right. Now, let's look at the candlestick behavior, right? Okay. And again, you can see, like, in terms of a bullish candle, there's a difference, right? There's key differences between what I mentioned in the past, in the previous few slides, where you have an open. Let's look at the bullish candle, right? You have an open, you have a low, high, close, right? But if you look at the bullish reversal candle, you have an open there, makes a really extreme low, and then it quickly retraces up, makes a high and close. You can see that's the difference between the two, even though they're both bullish, right? But they tell you a different narrative, they tell you a different story. It gives you a different understanding of the characteristics of what price is doing in any specific or given time frame. Okay? And again, it it's the narrative that is within each individual candle. I wasn't kidding when I said this stuff goes really deep. Okay? But there's ways of identifying what price is doing purely on how price is opening, and closing. The low that it's going to make, the high it's going to make, or the high or the low it's going to make, where it's going to open and where it's going to close. There's subtleties within price that will give you a better understanding and indication of what it will likely do next. Okay? Now, understanding the open high low close or the open low high close, right, is one of the components to make up the foundation, right, of our method of learning real technical analysis. And when I say real, I mean actual technical analysis, not support and resistance, not supply and demand, not indicators, not patterns, not any of that stuff. When I say real technical analysis, it's the things that we will be covering in the private mentorship course. Okay? Imagine if you're building a house, right? It's a cliche like analogy, but just imagine, right? Okay, you're building a pyramid, all right, in Egypt. And you need to have a strong foundation, right? And what I'm saying is like the open high low close or the open low high close, right? The thing that you get from the bar chart, essentially, right, is one of the major components that makes up a strong foundation for you to build the Great Pyramids of Giza that will stand the test of the ages, right? It will always be there. You will always be able to do. You will always be able to see the pyramids in in any sort of like aeon or time frame, like any ages. It will be part and parcel of how you train, okay? And it will make you a much more consistent trader, much better than what you are now. Okay, it is the core the core ingredient to understand bias. Okay, so what is bias? Okay, bias simply means anticipating and forecasting in advance where price will likely hit to next. Okay, if I were to say, hey man, what's your bias of the day? Do you think we're going higher or lower? That's bias. Okay, where is the market bias for tomorrow? What is it going to be likely doing? What is it going to be likely doing the first hour of market open? Right? What is it going to be likely doing in the first 4 hours after market open? What about the last 3 hours before market open? What's the bias? What is it going to do? Is it going higher or lower? Simply put, that's bias. Okay, and so understanding the open high low close or the open low high close, right? Understanding it, grasping it, right, will clearly tell you in visual terms, right? It'll give you an indication. You don't need an indicator to tell you these things, right? Whether price will be going higher or lower within a certain time frame. That's all you need, right? And this bias, right, like much like what you saw just now, the difference between a daily candle or an hourly candle, right? It's applicable to all time frames. But remember, they tell you different things. That's the difference if you look at how candles form in different time frames, right? It'll tell you a different story, right? And putting together all these elements will give you a better understanding on what price will likely do. Okay, and that also leads into how price or the candlestick will likely behave within certain market conditions, right? And then certain time frames, right? It's primarily used to read price action. Okay, so you need to understanding the secrets to the open high low close or the open low high close and applying it to a candlestick chart would unlock your ability to forecast and anticipate what price will likely do. Okay, again, like I said, like you're predicting, you're speculating, right? What is the probability of price moving higher or lower in a certain context? Because you need to put the context within your trades. I will teach you that. And this principle of open low and high close is it's applicable to every single asset class. I don't care if you're to be trading like lean hogs or orange juice futures, uh, aluminum futures on the sorry, the metal metal exchange. I really apologize. I forgot the name of the exchange that's based in the UK. Right, but any asset class, even your meme coins, right? Which I don't touch. I will never touch it. I'll never touch crypto. I don't think I will. It's too complicated for me, anyways. But even your meme coins, even your slow grass growing like Malaysian stocks, your palm oil futures, you can apply. They all have candlestick charts and they all behave in the same ways in every single market. Every single market. If you're trading like China market, Hang Seng, Gulf market, Abu Dhabi, Oman, that's whatever. They all have the open low high low close and the open low high close. They're all the same. Okay? And you can apply your understanding of this to any sort of asset class in any market. Okay? Now, this is the secret sauce stuff, all right? Understanding the OHLC or the OLHC, let's just abbreviate it, on the daily time frame, right? Why the daily time frame? I ask you, what's your bias for tomorrow? What's your bias for the next few days? What do you think price will likely do? Is it going up or is it going down? Is it going higher or lower, right? A lot of people just trade based on the daily time frame as well. Okay? It's what banks primarily do too. That would be banks' lowest time frame if they were to trade any sort of assets, right? They would not go anything lower than a daily time frame. That would be the lowest time frame, because banks and institutions, they're trading on a much, obviously using a much larger capital than you and I, but they also have a larger time frame, right? They're looking in terms of months and years and decades, right? They're not looking at what an asset class will do in the next minute or the next 5 minutes or 15 minutes or so. Okay, so that's why I'm using this analogy, right? If you were to understand the open high low close or the open low high close on the daily time frame, right? Like I said before, it is delineated by 5 p.m. Eastern time to the next following day's 5 p.m. Eastern time. Okay, I'm using Eastern time because that, to me, is the standard time for all markets. Okay, so right now we're on UTC 4, daylight savings. I'm not too sure actually, UTC 4, UTC 5, but I'm using Eastern Standard Time, and you should too. As my student, you should always be using Eastern Standard Time, which is the time in the east coast of the USA, New York time, pretty much, right? It's the daily candle, right, or the open and close of the daily candle. It would begin at 5 p.m. and it will close the following day at 5 p.m. Okay, so that would be the open and close of a daily chart. But in order for you to learn how to really learn how to use real technical analysis, right, and read price action with precision, we are going to exploit this understanding of the daily open and close in a different way. And I really mean it when I say we exploit it. Okay? What we do is we use a different time to establish the open and close of a daily candle. So we can accurately establish bias and know when and where to enter into trades precisely. Okay? So having a deeper understanding of price, right, and its behaviors will ultimately lead you to become a very precise trader or a precision trader. Just imagine you're like a sniper, right, and you're shooting like a small, like a small disc of a dot that appears as a dot in the sky, and you'll be able to just immediately shoot it with your gun, with your rifle, right? It's so precise, so precise. That's the kind of thing that I wish to teach you as a trader. Many of you, I'm sure like some of you at least have seen the live execution trades, that videos that I post online, on Instagram, on LinkedIn mostly. You can see that I have very clear targets of what I'm aiming at, and you can also see sometimes price is goes against me, and it's a hairbreadth away of taking me out on my stop loss, right? It's just like a tick away. But why does it just reverses, right? It doesn't take me out, and it just then suddenly I'm on side again, and it goes to my target just like clockwork, right? Because I have a deep understanding on how the open, high, low, close works, right? Well, in relation to other things as well, which I will be covering in my private mentorship, but just on the basic level, having that, looking at the open, high, and low close of each candle, right, in different time frames within a certain context, right, will give you a much, much better understanding on how to be able to do that. I can tell you that is, I want to tell you that is like, I don't want to say majority, but that's the basis of it, right? And how you see me do, and what you see me do, okay? How I'm able to like place a stop that's so precise, have targets that's so precise. Understanding the open, high, low, close, or open, low, high, close. That's it. That's the beginning point, the starting point of being able to do that, okay? And again, like I said, you can do this. You can do what I do, having that understanding of the OHLC and the OLHC in any asset class, on any given day, on any trading session, on any time frame, right? On any asset class, every market. Okay? So, this is the plug point, right? You want to learn more, right? You want to learn more about the open, high, low, close, and the open, low, high, close. How do you want to read it in terms of, in the context of a time-based candlestick chart, right? This will give you the foundation to build your learning, right? And learn how to really trade with precision and confidence, right? Like I said, it's the starting point, right? It's the beginning of being a precise and consistently profitable trader, all right? It's not easy to get there. I didn't say that you'll instantly get there overnight. I didn't say that you'll get there at the end of the 3 months mentorship course. Do you remember at the very beginning of this class that I said that you have to put in the work? It's all on you. I can only show you the door. I can guide you, as your mentor. I will guide you, right? I will take you there. I will walk you through things. I'll make sure you don't hurt yourself, right? But personal success can only come from you. I can't tell you what to do. I can't tell you, how to be successful at this. Only you can do that, and that's the beauty of it, right? That is the beauty of going upon embarking on this journey, because you have someone like me to walk you through things, to guide you, right? Or not. If you were to go at this alone, I really don't recommend that. You can, if you're a super genius, you can do that, right? But I doubt you'll be able to do it even within and have a good understanding within, uh, well, even the first few years, because it's very difficult if you're not, if you don't know what you're looking out for. And secondly, this industry is filled with, all sorts of, just not good people. Okay, it's this industry is just meant to just suck out every single penny out of your pocket, right? And you really don't want to be learning the wrong things, right? Just imagine just spending years and years of just learning. Imagine if you, like, let's just say you want to learn how to play tennis, right? And then you learn from this person, and they teach you, okay, this is how you hold a racket, and then you hit, and then you do that for years, and then later on you find out, if you really think about it, like, why am I hitting like this? It's hurting me. I don't feel comfortable holding the racket in this way. I'm not even making, like, like grand slams, or I'm not serving well. Why? But you know simply put, this industry, there's a lot of these people out there who think that, who are very confident, and I'm talking about people who's fairly successful, actually. People that would, like, stand on a soapbox, go on CNBC or Bloomberg, or give talk to like 1,000, 2,000 wide audience on a live setting. I think they're all teaching just, I'm sorry to say, but they're just teaching nonsense most of the time. I've been to a lot of these events, just like these classes that, that's just put on by brokerages, for example, right? Those, like, trainers that you see at expos. And listen, I don't want to dive into that, but all I'm saying is just be careful out there, okay? You want to learn properly, and as you can see throughout the course, I never even used a single pattern. I didn't use a single uh indicator. I didn't tell you anything. I didn't give you any aid other than price, and looking at price. And I really hope I impart, like, a sense of deeper appreciation and understanding of price, right? There's a lot of depth to it, right? There's a lot of substance behind what you see in your chart, and you don't really need anything else. Okay? Okay, so if you're interested in learning more, right, on how to, well, exploit the daily open high low close, or the open low high close, right, and utilizing a different time to establish the open and close of the daily candle, you can sign up for the private mentorship. Okay, and what can you do with that? Well, you can use to clearly exploit and establish a daily bias accurately. And I kid you not, on my social media accounts, they're not active anymore. Like, you would be able to find it, but I used to call the close of the KLCI index in my early days, in learning how to really trade. It used to be fun. I used to be like, it'll close. At the time, it was about like 14,000, close to 14,000. That was like the high at the time. I would just say, like, on that particular day, there was like 13,500. It'll close there, and a half. And I would be like, 1 or 2 points off sometimes, but on some days I'm just like dead on spot. And you can do that. You can learn how to do that, right? By really learning about how to read price and understand the markets in a much, much deeper sense. Okay? And another thing that you'll be able to use, just by having an understanding of the open low high close or the open low high close open high low close is knowing when to enter and exit trades. Okay, and you also learn, read, and identify bullish, bearish candles, bullish reversals, bearish reversals, or consolidation candles. All that stuff will be covered in the private mentorship. Well, and if you're interested in learning how to trade in a step-by-step way, in a deeper, meaningful, clear, easy, and a structured manner, well, you can go to our website, which will be releasing on the 16th of February, this Sunday, at ninefoldsystems.com. Okay, so you can go on the website, have a look at our course outline, and if you see that's something that you're interested in signing up for, then please do so. Make sure to leave your email when you check out, right? Because there's no way for me to contact you if you don't leave your email. Okay, then I would just have to refund you, and it will be a waste. Okay, and then you'll be taking up a spot that otherwise someone else would be taking up. This very limited space. I'm only able to take up 5 mentees. Okay, and obviously I can take up more, but I really, really just want to focus on just 5 people right now, because even if you look at this class, like, it's more than an hour long, and this is just an introduction. So can you imagine if a proper private mentorship class where it'll be one-on-one, it could go on for I think 2 to 3 hours, maybe more. Who knows, right? So let's just say if it's like 2 hours per person for 5 people, that's like 10 hours per day, not counting the fact that I have we have breaks in between. If you have 3 hours, that's 15 hours a day, right? So I really, and once I have too many mentees, I really just want to focus on people that really wants to learn this, right? Who wants to be able to trade like I do. Apologize for that alarm. Want to be able to trade like I do, and trade well, and it's gonna be challenging. Okay, it's going to be difficult especially for those who well, for most of you that's listening in even now from the start, more than an hour long. Someone who has no understanding of the markets or price or trading or anything that's related to it, right? It's going to be challenging. So I don't want to be spending just this X amount of time with you and then just move on, and then you're just going to be left wondering I still don't understand. I don't want to do that. I really don't want to do that. I mean it. I don't need the money. I don't need the money. I make my money from trading, right? It's only because so many people has been asking me constantly, sending me messages all the time, asking me to give them classes, right? I really didn't want to do it at first, but here I am doing it. So if I'm going to do it, I'm going to do it properly, okay? And I want to do it for people that is really able to commit to this, right? I really don't want to waste my time teaching or trying to coax someone into doing it properly, right? Into learning properly and to commit to it. Okay, so if you're interested, if you're really serious about being a trader, right? If you're really serious about putting in the time, I'm talking years. I'm talking way past the 3 months course that we're gonna do in the private mentorship together. I'm talking minimum 2 years. 2 years. Maybe 3. Just as if you were to go to university and get a degree. It's like that. It's like that, isn't it? If you have a degree, do you remember how it was like when you were in university? Right? Were you, well, if you're a high scorer and all, you're just chugging at it every day, but it's not like that, is it? right? It's not like high school where it's just like memorization, you know, rote memorization where you're just regurgitating like things and memorizing it. It's not like that. It's something that is a journey, right? It's a journey that you embark on and you discover things about yourself, you know? Trading is something that will bring out the worst in you. Someone that you wouldn't even know existed that lives in you. And that's the real you. When you have a position open when you're trading, right? That's the real you. All your fears, you know, your doubt, your excitement, you know, you're screaming at the screen. Suddenly you want to punch the screen when it goes the wrong way. That's the real you, man. Yeah, and that's something that you yourself have to discover if you're new to this, right? But if you're a veteran, right, I'll teach you how to keep those things within control. I will give talks, right, if I have to. If I will give talks that relates to how to control yourself, the psychology and emotional science, right? So I don't want to call it science, but like true experience, you know, like just really practical applicable stuff that will enable you to control yourself, because this craft, this trading craft, is all about mastering yourself. Okay, I just realized that, you know, I saw it on social media or something, that it's something that now been talked about a lot within the trading space or retail space, so to speak. But and it sounds cliche, right, at this point, but uh, you know, there is truth to it. In fact, it is the truth. It is very much the truth that it is all about mastering yourself. So you have to give yourself time to get better. And if you think that that's something you want to do, then you can head over to the website ninefoldsystems.com. We open on Sunday, 16th of February at 10 a.m. Malaysian time, and there will be only 5 places available. So if you really want to do this, then just sign up for it, you know, and just sign up for it. Okay? Okay, folks, that's all I have for now. I hope you've learned something, and you know, I apologize if I was just raving on and all, but that's the nature of things. That's mentorship. Okay, you have to listen to me, right? If you want to learn something, okay. And well, I promise I'll be much better moving forwards, and I hope you all enjoyed this session, and I hope to see you all soon. Thank you. Stay safe and good trading.